All right, guys, welcome on to my video where I will be explaining my Heikin Ashi strategy. And this strategy has helped me to actually double my account from the time frame of a Tuesday to a Thursday. So I wanted to share this strategy with you guys that I have learned, and it's helped me tremendously with trading. So we're going to get right into it. So first off, you just go to tradingview.com. If you have an account or not, you can just create an account for free. So I go to tradingview.com. Right here in this box, right here, type in GBP USD. This is one of my favorite pairs to trade during London session. So I'm going to start with this pair. So I typed in GBP USD, and from there, if you're just setting up your charts, you will go here to the indicators. You will type in moving average. Here, you're going to do exponential, and you're going to click it twice. And you click here where it says format. From there, you go to inputs, and I'm going to have a 200 moving average, which is going to be further away from price. And I like mine black, and I like it thick so that I can see it. And then I'm going to click format again on the second moving average, and I'm going to make that one a a 50 EMA, and I'm going to make that one red. I also like to make that one thick as well. And this is how I also have this stochastic, which you would add the same way. You would click indicators and type in stochastic. You would click on the format for that one, and my settings are 14, 7, and 3. All right, so I am on regular Japanese candlesticks right now, and what I do is I go ahead and you actually start on the day chart, and I go ahead and I do my all of my support and my resistance areas. Some people do like boxes for zones. I just typically do, lines. So I go to the horizontal line, and I just start marking up areas of support and resistance. And you'll also notice that the 50 EMA that hugs price tight, it resembles it can resemble support and resistance as well. Then from the day, I go to the 4-hour chart, and I look for any areas I might have missed. And then I go to the 1-hour chart, and you will see more zones or more areas where price may have stalled. Okay, and that's it. So I do that, and then from there, I go ahead and I click this tab right here where it says candles. I go to Heikin Ashi, and then from here, I am looking at my zones, my areas of support and resistance, and I'm using these Heikin Ashi candles for entries. And I'm going to show you how. So if we go and zoom in, we can clearly see that this move is on a downtrend, and these EMAs that hovers over price will actually tell you the trend right away, especially this 200 moving average. It tells you the trend is a downtrend. And so how do I use this exactly for my entries is this. So I see that price is at an area of resistance already because I already previously marked it up. When I see the stochastic above 80 and then it starts to cross in a downward motion with the red line being on top of the blue line, this indicator is telling me, okay, it's about to go back into a sell. right? So you need to know what indicators are for what. I specifically use this one as a timing indicator, as far as entries on the cycles of buys and sells. So I will see my stochastic cross. And now that I see my stochastic cross, I know that it's getting possibly ready to sell and it's at my resistance zone. And the trend is um is a downtrend, which means sell. So you typically want to trade with the trend, not too much trading against the trend. So when I see this happen here, I get this flat candlestick here, and I'll put an arrow on top of this and explain what do I mean by flat. Flat candlestick, a flat Heikin Ashi candlestick for a red candlestick, which is a sell signal, means that it is flat at the top with no wick at the top, and then you see it push down. You can wait until this candle closes, right, to make sure that it stays a flat, because I have seen times where it won't be a flat. It'll turn back into something else. It'll have a wick at the top. So once this 1 hour candlestick closed and you see that this is a flat, I would go ahead and get in on this in a sell. Okay. So when I get in on a sell, this is my entry, right? Where this candle closes my entry. So you have a little drawdown here. But as you can see, this whole move, you would have caught this move here. And you could have wrote it down here. But let's say you get in here, at the bigger portion of the move. So you see that this area is a very strong area of resistance. And if you go back to these regular candlesticks, you can see fill, right? And if you go here, you can see fill in this zone. So let's say you caught this move here, right? So let's go back to Heikin Ashi candles and go back to that same zone. So this is the zone that I'm talking about. So you see here how the how the stochastic cross down for the sell. So boom, that's my first signal. You see how price was exhausted in this area. You also see the flat candlestick appear. But your strongest time to get in is when you see this right here happen. When you see this 50 EMA cross under this 200 EMA, you can almost always, as long as there's no consolidation going on in the market, if it's a trending market, you can always guarantee and bet your best bet that this move is going to continue to happen unless something like news comes out. So if we go back and look, let's say you caught this move. So for anybody wondering, well, how do I know when to get out? How do I know when to personally get out? Is this. I will wait until I see a green flat pop up if I'm in a sell. So this would have been my exit here, right? Or if this stochastic dives below the 20. So if this stochastic dives below here and crosses, and I start, seeing this motion, if I see this cross for this up move, then I would typically get out. Or what you can do is you can use your basic projections, because you know that when it breaks, you look for the retest and then break down, and then you see this move here. So personally, I just get out when I see a flat in the opposite direction. And again, the green candles will signify the buy flats, and so this right here was the first green candle if you got in here, and you can squeeze out a great amount of pips out of this. And let's see how many pips on this particular trade you would have gotten in here and held it to here. That's 202 pips, guys. So that's how you know. And then let's go over buy signals. Okay. Yes, I said you want to get in when you are trading with the trend, of course. But in this instance, let's go back to this day chart. You can see, I'll remove these. You can see how price hit a major zone. So you always want to make sure you are checking your support and resistance areas, because we all know that market structure is above indicators, period, because news can come out, etc. And if you have breaks of structure, you already know it's gonna keep dropping. So you see this. Oh, hold on. Let me go to the regular candlesticks. You see price in this zone, and always remember support and resistance is zones. So you see price in this zone. You see price fell here, go back up, fell here, go up here, fell here, go here, fell in this area. Well, you see this candlestick close below, but you still see wicks in this area, so that's what I'm saying in the zone. And then you see it start to reject. So I see that on the day chart anyway, and you just kind of want to go back and forth and check that. So when I go here to the hour chart, I typically use this strategy on the hour chart. You can use it on higher time frames. You just have to be more patient, or you can use it on shorter time frames and go for less pips. So we're going to see our stochastic cross here. Boom. So you see that motion of the stochastic crossing. And you go here and you also see this flat appear there. So after this flat closes and you see that that flat candle popped up, you would have gotten in here. When that candlestick closed, you would have had to draw down. And like I said, you don't get out until you see a red flat. And as you notice, there is no red flash that has appeared yet, but you do see the stochastic nearing across, and you see it retesting this 200 EMA, meaning that it possibly can push back down because it's already in your resistance zone, and it's testing the 200 EMA, which is the stronger EMA. And yeah, so you would have still been in this trade, and let's see how many pips we would have caught for the buy. So that's your entry candle. Like I said, you would have had a little drawdown, but you would have been up to here. So that's 131 pips. And like I said, you would have still been in, or you could have been getting out because you see the stochastic cross. I'm going to show you guys one more example. We're going to look at gold. And I already have my support and resistance marked up. I'm going to go to Heikin Ashi and show you guys the moves that I caught this week with gold. So I have here my stochastic crossing for the sell, red line on top of the blue line. You also should know that gold has been in a huge sell for a couple weeks now. You can automatically identify that by this 200 EMA. So I have my stochastic crossing, and then I see this flat pop up here. So that's my entry candlestick. And here is my exit candlestick here. And you can, as you start to notice, you can tell that the stochastic and the flats almost appear on the same candlestick or the previous candlestick. And when we go back and look at the EMA's cross on gold, so I can show you guys how accurate these are. You can see that you would have gotten in here and you would have still been in, you could have still been in this trade. So yeah, when those EMAs cross, you can bet your best dollar that you can hold it. And so let's see how many pips on this sell. My entry candlestick could have caught this move here. So 133 pips. And then go back to Heikin Ashi candlesticks. And we're going to look at this buy signal that happened. So you have your cross here. You have a flat here. And you have this move. You see it test, and then come back and retest this zone. So you could have exited here, which isn't a lot of pips in this instance. But again, let's see. If you go to this day chart, and we go back and look in the past, we can see that this is a strong zone here. You see how it pushed up, and then boom, you see it push up. So this zone matches with this zone. So we know on the daily that's the area that we want to look at, of course. Stronger area. So it retested and fell twice. So I probably would have held it just knowing that that zone was strong. And this was my entry candle here. And let's say you did get out here. So let's see. Let's say you got in here and then you got out on this red flag here. Let's see how many pips that was. Go to the regular candles. So you got in here. On this candlestick, you would have squeezed out about 26 pips. And then you have this here, this cross here for the buy again. And the next candlestick, you have your flat. And you still would have been in this one. Let's move here. Let's see. Regular candle. Candlestick here. You could have been up 113 pips. So guys, that is a easy, simple strategy that you can use for beginners. Something that is dealing with basic market structure. Trend trading is the best way and most accurate way to use this, and um, you can basically combine it with multiple strategies. And you can just use it for entries. If you have another way to take profit, then do so. Stop loss is the same way. You always use stop loss above your previous high and above, below your previous low. Um, that stays the same. So yeah, this helps me with my entries. And I really like it because Hakinachi is basically the average of previous price. And they go ahead and form those candlesticks so you know the strongest part of the trend in those sequences that they show you, the greens and the reds. And the longer the flats and more flats you see start to pop up, you can that you can guarantee that that trend is starting to be strong. And that is my review on Hakanachi. I hope this guys help you to grow your account and you have a wonderful week in the markets. Definitely want to test this on your demo first, and then once you get comfortable, go ahead and test it out on your live. I hope this helps again. This is Coach Candles checking out. This call is officially over.